All right, Will, we're back. What episode is this
Hello.
now? 6?
6.
Episode 6. Did you have a good Easter weekend?
I did. That was yours.
Awesome. It wasn't too bad. I took one day off work. We are joined today. This is gonna be a super exciting day.
It is.
We're joined today by the lovely Toni Azzopardi of TLC Debt Counseling. She is an advocate for consumers, small businesses, and corporations, helping them deal with their credit challenges and doing credit restructuring. Toni, how are you today?
I'm very well. How are you?
Oh,
Just
wonderful.
living the life on ISO.
It's bloody
14.
snowing outside in April.
I know.
Well, it's
Oh,
sunny here where I am, so.
It's nice and sunny where you are. Yeah,
Yes, it is.
perfect.
Yeah, he's in Brooklyn. Aren't you? You're in Brooklyn, aren't you, Toni?
Listen, I'm in Whitby. I was in
Yeah.
Brooklyn.
Yeah.
I was in
I'm in
Brooklyn.
Bowmanville, and it was a bloody blizzard 10 minutes ago. So
It was
I'm,
snowing quite hard this morning. Yeah.
It was. That was during my walk. It was, yes.
oh, you went for a walk again today.
I've gone for a walk every day for the last 9 days.
Oh, good, Will.
Thank you.
It's
I
good.
have walked probably 45 kilometers in 9 days.
It's just because, Will, you are the sunshine in Brooklyn, right?
Thank you.
You're
I bring it every single day.
I can't wait. I can't wait till the next time we're on the squash court, and we'll see how much that's helped you.
It needs to. I need to do something. So, like, I'm eating like I am rehearsing for 600-pound life. Like, so I need to. I'm trying to curb it. I'm trying to do better. I'm trying to eat better. But eating, you sit at night and you're like, what am I gonna do? So you pick up some chips or crackers. Or
Oh, you gotta do what I do. I'm doing a 16-hour fast, so I don't eat from 7 o'clock at night until 11 o'clock in the morning.
Yeah,
That's good.
that's good for
And the
you.
key is,
I should take that advice. I'm going to take that advice.
and the
Yes,
key is,
An hour?
I drink 4 liters of water a day, so that way that
Perfect.
keeps you somewhat full. Now, middle of the night, sometimes you got to run to the bathroom. Not gonna lie, but
Right.
throughout the day, keeps you full. You eat your meals between that 8-hour period, and so far it's been an absolute dream.
That's good.
So in the 16 hours, you're not eating. You're allowed to have water and coffee and stuff, right?
I have a bone broth at 9 o'clock usually before I go to bed.
Mhm.
I have my black coffee in the morning with some collagen powder mixed into it.
Collagen is important. I'm on that too.
It's good for the joints.
It
So been doing all of that, and so far it's been really, really good.
You know, I heard the collagen powder that I take. It's probably the same when you're on. Great for the skin. When you're
It is.
a now old man, you know, I'm in my 40s now, so you just want to make sure your skin looks and feels fresh. So this year I've been taking collagen in my protein shake during the day, and it's been. I'm starting to see a difference. I think probably my brain, but I think I look 39.
Oh,
Well, you gentlemen will have to email me your beauty secrets. Send them over. Bring it on.
Perfect.
that's okay, Toni, because you can help us in so many other ways with this wonderful debt work that you do. Because I have to be honest, I mean, we've worked together with a few clients now, and I didn't even know that people like you existed prior to actually meeting you. So why don't you tell everybody a little bit about what it is that you do?
So I own and operate my business, which is TLC Debt Counseling. We're also known as TLC Debt Help. And we assist consumers and small businesses as well as corporations with reducing and eliminating their debts. We have a multitude of options, and we take care of debts such as Revenue Canada tax debt, credit card debts, any other types of unsecured debts, including 407. So what we do is we assist our clients with getting back on track, basically restructuring their finances, and also credit rebuilding, which is a key component of the stress associated with debts, overextension of credit. So we're basically a one-stop shop, and we provide our clients with a multitude of options and solutions.
Fantastic. Go ahead, Will. I can
Oh,
see
okay, thank you.
you're dying to ask a question. I can
I
see
have
it.
questions.
Top
Guys.
of that
So,
bit?
with what's happening now with this pandemic, obviously,
Yeah.
small business, we are hearing every day in the news that small business owners, who employ people, are waiting for funds from the government
Right.
to help them operate. So now they're probably going to be incurring some kind of debt. What are the kind of tips you can give someone that's in the situation, that's waiting for help from the government, that's
Right.
probably a month away, what can they do to minimize or mitigate the damage it can create financially for themselves?
Okay, so first and foremost, try to communicate with the creditors. Try to communicate. If we can take advantage of some of the lowered interest at this particular point in time and still maintain the payments, that's wonderful. Please do not extend any further credit during this time, because credit utilization, how close you are to your limits, impacts your overall credit score. It's 30% of the overall credit rating and credit score. With the algorithms, there's 4 other components, but try not to extend any other credit. Also, secured lending against your property. You do not want to secure any more funds to be able to float your current business by utilizing or leveraging a property. The unsecured debts, try to the best of your ability to make your payments without sacrificing the most important things, which is your food, your heat, your hydro, your utilities, your mortgage payments. Supporting your family and their basic needs is most important. If you do run into trouble or you cannot operate your business, there are always options and solutions outside of that or this particular time that we can resolve those issues. We can not only resolve those issues by reducing and eliminating said debts, we can also help you by restructuring a similar business model, only better without the lingering debts that you've already had.
Wait, let's touch on that for a second though, because that is the most amazing thing that since I've known you that we came across, because I didn't even know that that was possible. Right? Like, so Will, just to fill you in, I had Toni work with a client who called me crying in tears, thanking me for because Toni solved all of her debt problems because she thought she was going to lose her house. And then, like, she thought she was going to have a sleeping bag downtown Oshawa living on the street. And Toni solved all the problems for her at a very reasonable cost.
Yeah.
Right. So tell me a little bit about the restructuring process.
So the restructuring process, whether or not you're a corporation, let's start with said corporation. When people have a business model and it's a corporation, most often they feel like the corporation, or they think that the corporation is a standalone and they're an individual, so the corporate debts have nothing to do with them personally. Okay. In certain cases, the corporation is known initially as a separate entity and the person is known as an individual. But there are a lot of debts that pierce the corporate veil of the corporation, and there's a lot of director's liability. Okay. So when we're looking at a corporation or a corporate client, we want to ensure that the assets that vest with the corporation are taken into consideration, okay, as well as the liabilities. And with that particular client, as long as they don't have a ton of assets, like a consultant, the consultant that we dealt with, we can reduce and eliminate those particular debts and have the client open up a new corporation, limited liability, or an Ontario numbered company, start to operate under that and leave the debts that vest with the corporation, like corporate tax debt there, anything that pierces the corporate veil and the director's liability for, let's say, HST obligations or payroll tax. We can then do a personal restructure for that client, so they're personally restructured with anything that pierces the corporate veil, and start a new business.
Wow.
Yeah, the first time I talked to Toni about this, it went way over my head, and I was mind blown. So that's a lot to take in. Now, so let's say a client hears all that and they're like, "Wow, I wonder if that could possibly be me." How do they get in touch with you?
So they would contact me through my toll-free telephone number. They can also email the company. They can go through links through the Better Business Bureau to also communicate with my organization. The toll-free telephone number, if you'd like it, Dan, is 1-866-926-4700.
Perfect. Because what we'll do is we'll put, and I have your email address and your website. We'll put the links up with the video, so that way anybody who hears something in here and thinks, "Wow, that might be something that we need to talk to you about," they'll be able to reach out to you directly and just have a conversation to see what fits them. Because really, I mean, that's what I tell all my clients to do. They'll start talking to me about debt stuff and all these different things. And I'm like, just call Toni. And then Toni will talk to you about it and let you know what your option is.
I also wanted to add with the credit rebuilding aspect, Will, we were talking a little bit about that earlier. 98% of all of our clients that are in debt, they're like, what about my credit? I don't want to impact my credit score. We can always rebuild a credit score. I have clients who come to us, file a bankruptcy, and within 24 months, we can get them A-lend rates for mortgaging. Okay.
Now, when you say, I was going to ask about I had a question here to ask length of time. So someone has a bankruptcy,
right?
You're saying within 2 years they can have, go for more from a lender.
Yes.
What are the steps? Like, can you give us like an overview what the steps are involved with that?
So I'll give you an example. A client files a bankruptcy. You take the 24 months. You initiate an express credit rebuild. The lenders, 5 major banks, let's say, as well as CMHC, what they want to see is 2 years outside of your bankruptcy, 2 brand new fresh trade lines. We want to ensure that we have an installment trade line, which is like a loan, said payment, equal payment every month on a declining balance, as well as a revolving trade line, which is a credit card per se. We work with the client and the algorithms to push up the credit score over 24 months, build a brand new credit history. Although with TransUnion, the bankruptcy will appear on the credit bureau 7 years as at the date of discharge, Equifax in the province of Ontario is 6 years. So during the 24 months, we rebuild a brand new credit history. Although the insolvency shows on the bureau for that length of time, we can still move forward. I mean, I had a client, we got them A-lend rates with, it was actually CIBC after a 24-month express credit rebuild. So we want to take some baby steps, right? We want to clear up the debts, have the debts resolved either by, let's say, a bankruptcy, worst case scenario, a proposal is another way, not-for-profit credit counseling is another way, but we want to find a remedy. And then once they finish paying off their settlement or the bankruptcy, we want to move forward with an express credit rebuild to position them for home ownership or, living their best life.
Right. No, that's great.
Now, explain to me the difference between a proposal and a bankruptcy. Because I've heard people that go through a proposal and basically they said at the end of the day, they should have just went to the bankruptcy because the proposal almost kept them down as long as the bankruptcy would have.
Right. So in a proposal, a consumer proposal, we'd be dealing with what's happening today. In a proposal, it's basically an interest-free period, not to extend 5 years if it's just a standard proposal, where you can repay a fraction of your debt, a reduced amount, and it's based off today. Okay, so let's say a person's unemployed and they have a reduced amount of income. It would be an affordable strategy for them to pay a fraction of their debt back. They're kept out of a bankruptcy. There's no rules or restrictions on them being a director of a corporation. They're basically free. It's an interest-free consolidation, not to exceed 5 years. Okay. In a bankruptcy, when you're in a bankruptcy, you're not released until you get your discharge. So the trustee, as an officer of the court, the trustee in essence becomes you. They're there to monitor your estate. You have specific guidelines on surplus income, how much you're allowed to make that's exempt income based on the amount of people in your household, your children and your spouse. All income is taken into consideration: child tax benefit credits, spouse's income, your income at said time. Let's say in 3 months, you go and get a job for $80,000 a year. You're not getting out of your bankruptcy if you have surplus for 21 months. That's almost 2 years with surplus income. After that 24 months, or 21 months, again, it's 7 years with TransUnion, 6 years with Equifax. In a proposal, you've got 5 years. If you can put extra money on it, I don't know, you get an inheritance, you get a better job, paid off as quick as you can. You have 5 years paid off in 24 months. Express credit rebuilds and you're off to the races.
Right.
I would far rather a client file a proposal versus a bankruptcy any day. Bankruptcies, in some cases, you've got a senior limited income, it is what it is. That would be no surplus. That would be a 9-month exit strategy. But you have to be very careful because trustees are trustees. They're not working for the client. They're like a referee. And when they're looking at your estate, they become you. Equity in your home is in your estate, correct? You got to pay that out. You have to get your discharge. You have duties and responsibilities. So I'd rather keep them out of that and have an interest-free arrangement. It's not a loan, but if you think about the term, it's in essence, interest-free monthly arrangement to get you out of your debts.
So are you able to rebuild your credit score in a, I guess not with a bankruptcy, but with a proposal? No?
No, and this is a miscommunication out there in this particular debt restructuring world. You cannot rebuild your credit score or credit history while you're in your proposal. You've got to pay it out and then take the 24 months. However, if done correctly with the proper advice, during the time that you're in the proposal,
right,
there are ways to get your credit score number to increase. That's not your overall credit profile. So instead of coming out of the proposal with, let's say, a 450 credit score, okay, which is low, you could literally do specific things, which we teach our clients, so that you come out with a 650. We'd rather rebuild you from 650 to 900 versus 450 or 400. So there are specific things that you can do to work the algorithms to take that overall number and increase it, but not said credit rebuilding.
Right. So let's go back to your initial point regarding corporations.
Right.
Now, I guess any size corporation, entrepreneur to, X amount of employees who sort of do something within themselves to sort of manage or mitigate their debt load, correct?
Right. You can, there's a lot of factors when you're dealing with corporations as well. You have to remember you've got your AR to consider as an asset. Okay. So I've got, 250,000 in AR out there. That's an asset with the corporation.
Accounts receivable, Will. Accounts receivable.
Oh,
I did account. I do know basics accounting. I do the basics.
Some people might not know that, Willard.
Right. True, I appreciate that, Dan. Sorry, I'm trying to, not talk so technical. So you've got your accounts receivable. That's an asset. You've got to look at the assets of the corporation. Sometimes for corporations, it is better to file a bankruptcy, and you hear this all the time. You file a bankruptcy for the corporation, they get themselves protected, and they end up opening up a similar corporation. Now, please remember, any assets with that corporation, which they deem to be an asset, that have securities against the asset, there's no equity there. There's no equity. It's the equity position on live assets that don't have securities, unsecured.
Right. So I like what you just said there. So again, if you're an individual, you have options. If you're a corporation, you have options. There's always options. It's never just let me file for bankruptcy and see what happens. You should always weigh your options and use a company like yourself to sort of go through the process, because you guys know what's best.
Exactly.
And you can hopefully minimize the damage for future, home purchases or whatever.
Yeah. Now I will give you one example, and you can see this on the Better Business Bureau. We have a 5-star rating. I will say that.
Right.
1 to 5. We've never had a 4 in our history of operation. This one particular client, her husband owns a restaurant. Her husband owns it. It's never been in her name, and the home has never been in her name. She went out, and she actually puts it on the Better Business Bureau, that she went out and she had to resolve her debts, and she kept going to trustees and seeing what she could do. And she was told $700 a month over said 5 years. Anyway, by the time I had done her restructure, $100 a month interest free for 60 months, $6,000.
Wow. Okay.
Yeah.
So again,
her reviews, actually, she puts she tells her own story, but it was, awesome. We put our feet on the floor every day. We get to change at least one person's life. And that's
right.
My staff and I were just, it's an amazing place to be. And especially with today, if you reach out for free advice and information, we're giving it to you. If we have to redirect you somewhere else, we're going to do it. If you decide you want to engage the services and we're working hand in hand with you, you extend your hand. We're not letting go. We're in it together. And all of the clients know that.
So is now a good time for, let's say someone is at home, which we're all at home. Someone's at home, mm-hmm. and they're now saying, hey, you know what?
Yeah.
We have debt. Is now a good time to contact you, because I know rates are going down and there's opportunities with government programs. Yeah. Is now a good time?
So you and I know that the rates are going down, but you and I know that that's a Band-Aid. No, that's a big thing.
Never say that.
Once we get out of this, which we will,
You know,
the debts are still there. And
Right.
although the rates are going down, what you're doing is paying interest every month. Your debts are still there.
right.
Deferred mortgage payments. You
Yeah,
really
I was like,
know
I
they're
know
going to
here.
get back the payments onto the end of the term, still making interest. You've got an
Does that impact your credit score?
No.
Okay.
Deferred mortgage payments will not. Now, if you miss your payments, obviously it will. But anyway, right now is a good time to look at options, explore options. And right now, some of the things that I'm seeing with the creditors and their compassion when you're looking at proposals, and people being on the CERB benefits, like we don't know, we don't have a crystal ball. It's
Right.
It's really going in the favor of the consumer at this particular point in time for debt restructuring. Right now, if you can be making $100 or $200 a month payment interest free, isn't it better than your $700, $800, $900 a month going to interest?
But
That is the question, everyone.
I got a question because so that sounds great, but you made a great point that we don't know how long this is going to go. So
Right.
should somebody take their debt right now and try to do something with it when there is a likelihood that they may need to incur more debt if this goes on another 3, 4, 5 months? Or should they wait until this is relatively over, see what their entire debt profile now looks like, and then come and do it?
Okay, so once this, I mean, every situation's different, Dan. Like I said, we got to look at each client's particular situation. Let's say they wait. Right now, they're on CERB benefits. 2 people in the house. They've got their CERB. They've got their child tax benefit credit. But when they go back to work, they're making $4,000, $5,000, $6,000 a month. They just incurred more debt. But we also have to take into consideration what the regular household income is at the time and whether or not they actually will qualify. You have to have a specific amount of income. We have to compare what would it look like in a bankruptcy today and what would it look like in a proposal.
Okay.
Right.
So it's worth a look-see right now. And then I can also consider what is your regular income when you get back to work, and I can advise the client either way.
This is why.
Because now you have the time. Like, most people would say, I'm so busy, I'm working, I have kids and daycare. Everyone's home. It's not hard to call you, Tony, and go, hey, I have debt X.
Let's hang out and have a telephone conversation, right? That's a good time.
Exactly.
Yeah.
Exactly. Now, what are the biggest, I guess, debt misconceptions that are out there? I've always told, it's always good to have a credit card. I know about the credit card ratio business. There's people that are out there that, my parents, for instance, don't have credit cards, right? But if you're trying to build some kind of profile for yourself, how would you go about doing that?
So that's a great point. Now, I was formerly an account executive with Equifax Canada in my younger years. I don't know if Dan told you that.
You're good to know. I'm adding you to my phone. You're a good person to know.
You got to call me.
I will be.
So you have to have a credit score. Credit scores are very, very important. It doesn't matter whether or not you're going to rent, you're going to own a property. Insurance. Did you guys know insurance rates? They're going to check your credit score, and depending on that, if you have a damaged credit score, your insurance rates for your automobile, they're going to go up. They're going to go up. If you want to get into the military, you have to have a good credit score. Did you know that? Police officers.
Oh, well, I can assure you right now, I will be in the military, and no one wants me to be a police officer.
So prepare to be in the military. Look at you. No, I don't know what you did, but you gotta have a credit is very, very important. Now we want to be responsible with the credit.
Right.
So I say the 2 pieces of extension of credit that you should be carrying any debt on are obviously your mortgage and an auto finance. Everything else, responsible use of credit, putting certain things on a credit card and making sure you pay it off before the interest period, which is 20 days, right? Put groceries on it, go out, and pay it off in 18 days. I think they're sneaky. I sometimes don't think they post the payment in time, so I do it in 15 days. But have a good installment trade line. Also have, a revolving, have a credit card, but use your credit card responsibly. If you don't have the cash to pay for it, or you're not going to have the cash to pay for that flight or that trip, do up a budget. Put $100 a month away and just wait your 12 months until you can go on your trip, but save for it. But definitely you need to have credit. Once we file clients, let's say, proposal or we execute their strategy, we get them another credit card. We always do.
Good.
How?
How? It's a secured card, Dan. They go from
Cash card.
$500 to $10,000. I mean, we're dealing with corporations. You need to have some type of credit to be able to order specific things.
And it's sort of like an Amex almost, right? Those cards where you charge to the card and it's paid off by the month or by the time the bill is due.
Yeah, so a secured credit card, what that is you put down a one-time security deposit. So the lender will hold it in a trust account. You're not earning any interest, but it's always there. If you don't have a balance in your card and you close the card off, you're going to get it back.
Right.
So think about it as money in savings. You never have to reload the card, and it also reports to the credit bureaus, unlike a prepaid card that you have to load.
Right.
So we like using that as a tool with said guidelines on how to put a specific amount on the card, let's say 30%. It's on $1,000 limit. You put 30% on, let's say for groceries. Lenders are going to hate me for this. Hold it for 15 days, mark it in your calendar, and wipe out 30%. It's the same as having a $10,000 limit and wiping out $3,000 in one pop. Algorithms go up.
Interesting.
I didn't know that.
That's quiet. So I know
I usually go right up to 90%.
Man, utilization's 30% of your overall score.
Toni, I live on Amazon and Harry Rosen, man. It's so easy online to just charge, charge. And then I wait, and then see, because the way we get paid, sometimes you get nice little lump sums. So then I'll pay it off, right? So so that's how I I didn't know that 30% rule. So that's
actually a good point, Dan, about people that are like Dan and myself get paid in lump sums.
Yeah.
You know, how do you minimize the damage to your credit score when you get paid in chunks?
Right. So credit utilization is 30% of the score. I'll have another component. Think about it as a pie chart. You've got 35%, which are late payments, collections, bankruptcies, proposals, judgments. You have 30%, which is how close are you to your limits, right? That 30%. You've got a 10, 10, and a 15. 15 is length of credit history. So if you have a card, an old card that you've had, like a BMO credit card or a Capital One, and it's old, don't ever close that card on. You might not want to use it. It's length of credit history. Tuck it under in a drawer and keep it. That's 15%. Once you close it off, your length of credit history, becomes shorter. So
that's a tip then. So let's say someone pays off
tip. That's just for you guys.
Yeah, so someone pays off a credit card, don't cut it up and cut off that credit source.
Right. Just
credit card away.
Don't use it for your length of credit history, which is 15%.
Also, now, does that work if you lower the balance? So let's say because I did this, I obviously, again, I'm a credit idiot. So I had a $15,000 Scotia Amex card because I used to work at Scotia Bank. But I had that the longest. But when I left Scotia Bank, I didn't want anything related. So I cut, and I didn't need a $15,000 card because I had another larger one that I ended up getting. Mm-hmm. So would it have been better? Does that still work? Let's say I took that $15,000 card and for reasons of not getting fraud or whatever, if I just reduced it to say 500 and just kept it open.
So you had zero balance on it at the time, Dan?
Yeah.
Okay. So let's say you have 3 other credit cards. You've got a 5,000 CIBC. You've got a 5,000, BMO. There's $10,000 in available credit, right? And then you've got this 15,000. Let's say these two are both at $4,500 each. So you've got $9,000 over here. You've just eliminated a portion of your overall available credit. 15,000 gone. Now your utilization on what your available credit is what, 80, 90%?
Oh, man. This is giving me a headache, Will.
Well, no, I get that because I was going to, I have a credit card, I had the same credit card since I was 18.
Yeah.
I'm going to close it. And the bank, because it went from CIBC to TD, is an airplane card. And I use the card regularly, but I was going to pay it off and then change to another provider. They're like, don't do that. And now I see the value in having that long, credit card for 24 years.
Right. And reduced overall utilization. So $100,000, if you've got a couple of cards over here and, you've got 20,000, 10,000 on 2 cards, you have 100,000, you're only at 20% utilization, excluding any installments.
Right.
30% of your overall credit score. Yay.
Right.
Don't,
That makes sense.
yeah.
That makes a lot of sense. Here's another question.
Yeah.
What are the biggest reasons why people are in debt?
Consumer consumption.
I can't.
I'm impatient. I can't wait. I want it now. I want to keep up with the Jones. Yeah, it's just people aren't willing to wait now. It's just everything has to be so quick and instant. I mean, if you look at, our parents or our grandparents,
Yep.
if you didn't have the cash, you didn't buy it. Way back in the early, 90s, when I was with Equifax and CBCL, TDG, they were throwing credit at everybody, and there was this big rush to give everybody credit. And then you had the credit available to you, and a lot of latchkey kids out there. Parents are out there working, they feel sorry. I want an iPhone. I tell my kids all the time, that's really nice, you want that, put it on your birthday or Christmas list and we'll talk about it. But I do not. And if they were both here, they'd tell you, like, oh, we have to wait forever. And I do not go and buy my children things each and every day, like when they want it. They have to wait. And they're actually really good at budgeting, saving, and being very patient for their purchases.
I think that's the next question then, regarding kids.
Oh yeah.
Right. So, because I agree with you, as a child, I felt like I got nothing. Budgeted,
yeah.
they had no debt. They lived.
Yeah.
They raised 5 kids. I have 0 kids, and it's crazy that they lived without debt for 7 years.
That's also why Will's always happy. He's got 0 kids. So he's sitting at home drinking rum, eating like he wants to be on the 600-pound life, and he's got no kids. Like, that is heaven.
What is one tip a parent can do with their kids, and especially right now, in terms of they're figuring out how to sort of budget, and because I find people are panicking now because we're not prepared for this, and you should always have some kind of rainy day fund, because at the end of the day, if you injured yourself or if you got sick, you need some kind of fund. So this is just hopefully a wake up call for people.
It's that. It's also combined with kids going to college and university. My daughter's for 4 years in Guelph, and she decided that she wanted to live her best life ever and take 2 years off. I've got another one who's 17 behind her. Now I'm going to have 2 of them in university at the same time. Wow. It's an average of $25,000 to $26,000 a year between their res, or my daughter's living in a house. Some easy math there. At first she said she wanted to be a doctor. I'm like, baby, how long is that? She's like, 10 years. I go, times 25? Oh my God. You want to be a nurse, honey. You want to be a nurse.
Right. Yes.
But there's a lot of added expenses. What I did with my girls is they were young, and I put a literal 8.5 by 11 budget down. And I said, I want to show you something. And I made it about their allowance category, really, because kids are instant. And I said, this is how much money mommy has coming in as a single mom. Like, seriously, like, we got to work together here. This is how much money I have coming in. And I showed it to them. And I said, and this is money that we're going to pay for our lights and our heat and our hydro. I literally took them around the side of the house. We had fun. We turned every single light on. The TVs, the lights, and they're watching the meter. And then I got them back in the house. And I said, if we turn this off, and instead of it going tick, 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 there's $1, $2, if we save it, where do I want to put the money? I go, oh, look at this spot. It says allowances. I want to share it with you guys. Groceries was another fun one. My youngest was the little one at the time, the youngest, Cassie, we called her the runner. Taylor would have the calculator. And oh my God, they never bought one brand name, nothing, because they both stood at the cash register like 2 little fools thinking they were at the casino. And I said, and it's instant, right? So I said, okay, today we have $250 to spend. And I would bring cash, and I'd say, if we can come in below, I'm saving $20 at the cash or whatever. They're buying no President's Choice. They're buying no name, right? And they don't argue over snacks. They decide before they leave the house, okay, we're going to get ice cream and cookies, or whatever, what they want. And then at the cash, they would laugh. The cashiers, what are they doing? And I'm like, here's 10. Then they want to go to Subway on the way home, let's say, or they do the $5 deal, and then they pocket the other 5 each.
Right.
So teaching them about budgeting really young is one of the greatest gifts you can give your children.
So are you seeing it now with your daughter that's in university that she is able to budget properly?
Okay, let me tell you. I got in so much trouble. I don't even want to share this, but I'm going to tell you what I did. Okay, because we all have moments. So I took my youngest shopping over. I'm in Whitby, so super center over here, right? So I decided I wanted to have friends over. I was going to have a get together and have dinner. So then I started throwing extra things in the cart. Like, you know, I don't know, I needed this aluminum roasting pan. I had a weak moment. I was throwing all this. Anyway, she looks at me and she goes, "What are you doing? This is like $450. Like, what are you doing?" I said, "I got to get some extra stuff. I think I'm going to make a lasagna and whatever. And I'm going to have company over." She goes, "I'm calling Taylor." She called her. I was scared. I'm like, "No, don't tell your sister." But yeah, and clothes shopping, back to school. They go with their friends. They will literally go to the stores. They'll pick out what they like. They say to the lady, "Could you put this behind the counter, please?" My daughters will walk out of the Oshawa Center or any mall with 10 bags on the same amount that they have that their friends are going with, because then they'll go back and go, "I'll take that, that, and that." Loaded, like of just bags of clothes. Yeah. So they're both extremely good. My daughter put herself on a budget, and she now, I mean, the ridiculous amount that I sent her for groceries and her, you know, her regular shopping and her needs, it's ridiculously low compared to the other parents, because she's like, "Look, I did this, I saved, I coupon clipped." And I love it because it's really empowering them to be strong, financially independent adults and not get into debt.
Wow.
Yeah, that's amazing.
Yeah.
That's rule number one. I'm not a parent, but if I was a parent,
Yeah.
educate your kids on financial smarts. Invest young.
So are you saying that when I was in university and I took a credit card every time they offered a box of cereal, so I had like 5 of them, and then I took this isn't even, it's funny, but it's really a true story, so it's kind of sad. I took part of my OSAB loan and I bought myself a beautiful gold pinky ring with my initial in it.
Of course you did, Dan. Of course you did.
Yeah, I totally did.
A pinky ring?
A
Why?
pinky ring. Yeah, I don't know. It had a beautiful baker, and I had it. It back then it probably cost me like $800 or something like that.
Oh, God.
But yeah, and
way
so
back in the day, way back in the day.
I learned an awful lot of stuff about credit from going to university. Like when I came out, I was an absolute disaster.
And that's the thing. I mean, if we can get to the kids early, because I have kids coming out of university right now. One kid is like, "Oh my God, I applied for a job at, where was it? Humane Society, but he was going to be working at the front counting cash for donations." And he said it was between him and another guy. They ran a credit score. He didn't get it because he wasn't paying his, you know, cell phone bills, his credit cards. Also, credit inquiries make up 10% of your overall credit score. Will, you know this, people are going out and applying for mortgages. They go to one lender, that's okay.
Right.
Go to a second lender, that's it's going to drop. Your score is going to drop. A third lender, because they want to negotiate rates.
Right.
That is not good, because the algorithms, the way FICO, Fair Isaac Company, designed the algorithms was, this is just a computer program. If you've got to keep applying for credit, they're not taking into consideration you're shopping for better rates. It's, hold on, what are we missing that you didn't get approved?
But isn't that an industry problem though? That shouldn't happen though.
Yeah. I totally agree with you. I've disagreed with that. You shouldn't penalize somebody because they're looking for better rates at all.
It would be better. So if they use let's say they go, you know, from a bank to a mortgage broker, and a mortgage broker is a broker, wouldn't a broker be able to do a soft kind of pull of someone's credit instead of doing a, you know what I mean? Instead of going to their credit every second. You know what I mean? So
soft inquiries are really non-applications for credit. But if you're going to a broker and you're applying and they're going to take you to maybe, I hate to throwing out lenders' names, Home Trust or, you know, whatever. The hard inquiries are going to be there. They're not going to be soft. Like if it's an employment application, that's a soft inquiry. If you're doing your own inquiry, it's a soft inquiry. It's not going to hurt you. But I do believe that if you're, I mean, I can't change the rules, but I do believe that you shouldn't be penalized if you're looking for better rates.
But that's another important thing, right? People should check their own credit scores.
Mm-hmm, definitely.
Because I found that out the hard way when I just bought my brand new car 1 week before the world ended. So it's sitting in the driveway all night.
What car is this?
What's that?
What car?
Oh, I bought a BMW 530 X-Drive, but I bought it like a week before.
It's a
So
DeLorean.
You got rid of the Lexus?
the lease came up.
Oh.
So I went and bought this.
Yeah.
So, hey, I got 80 cent premium gas though. So it's sitting in the driveway full of gas and it's got like 75 kilometers on it. So I try to drive it to the grocery store as much as I can. But when I went to go and buy that, I found out that Nissan from like 2 cars ago didn't discharge my my lease when I switched cars, and so I have a Nissan Pathfinder as well, and so I said, well, that's obviously paid off because I have a new one.
Right.
Like they switched me from my
Right.
2014 to the 2017, right? But that was still on the credit report, dragging the score down a little bit.
Because you're part of your utilization. We talked about that, right? So you've got whatever you're doing over here with your credit cards and your other Nissan loan. Now it looks like you've got 2 of them.
Right. And I would never have known that though.
$80,000 in.
I don't check my credit ever,
You
really.
should check it. I mean, you can pull a trans, which is, your Credit Karma. That's a trans bureau. Also, if
Is
you
Credit Karma reliable?
it's a TransUnion bureau. So yeah, it is. It's fairly reliable. I prefer to go direct to TransUnion. Also, a lot of the lenders right now, you can check your credit score for free. BMO, it'll say check your score. Pull an Equifax, equifax.ca.
And how often should you check? Once a year? Once?
I get alerts. So I'm on a program where I'll get alerts if anything peculiar happens. But once a year is good, generally good.
Perfect. And then, and if you see something irregular on your credit score, what do you do?
You're going to contact, you'd contact Equifax or TransUnion, depending on the bureau, and you would want to submit a corrective action form, which is, you can get directly off their websites.
FYI, be prepared to give up the blood of your firstborn child to get that done.
Or you can call me, and I can help you.
Yeah, because that was the biggest pain in the rear end thing that I've ever done in my entire life.
They're not very helpful, but I can give you some pointers.
Yeah.
Actually, Will, I got a really good pointer for you after this call about mortgages.
Oh, okay.
Mm.
I can't wait.
So this has been amazing. Like the information here is going to help so many people. So Toni, thank you so much for.
You're welcome. You're welcome.
We are going to get this out to our audience, and then anybody that has any questions, feel free, reach out to Toni. She's fun to talk to, and she's got a whole bunch of knowledge.
Thank you, Dan.
Hey, no problem.
Thanks, Will.
Thank you.
You've helped so many people. So thank you for joining us, and we'll be in touch.
We will.
Absolutely. Have yourself a great day, guys. And it's snowing again. Good luck.
Awesome.
That's right.
Love you guys.
Thanks a lot, Toni.
Okay, you're welcome.
All right.
Bye.
Take care.